Welcome back. We're expecting a busy day this morning ahead of the retail sales numbers for the month of August. That will be released at 8:30 a.m. Joining us right now, Chief Economic Correspondent for the Wall Street Journal, John Hilsenrath. John, good to see you.
Hey, Maria, great to be here.
Well, this is an important report. It's going to give us a window into how the consumer is doing. Two-thirds of economic growth is consumer spending.
Right.
What are you expecting? Any indications? And what about holiday hiring? Does that play into your expectations?
I think we're going to get decent numbers, and, you know, consumer spending has driven this economic expansion in the last few quarters. So it's very important that we do get decent numbers because we're not getting strong business investment right now. Inventories have been up and down, so if we don't get a good report, you know, that's another sign that we've got another quarter of weak growth in hand.
Well, you know, yesterday we got that great report that incomes have been going up, John, but a lot of the country is still not feeling this economic expansion. So how should we read those numbers?
Well, you know, I think we might finally be getting to a point with the unemployment rate down to 4.9%. where the expansion is starting to spread a little bit more widely to wider segments of the population. And that's what we're starting to see in those numbers that came out yesterday. But the problem here, and what's such an important factor in this election, is it took so long to get here. We're in the 8th year of this expansion. You know, why has it taken 7 years for it finally to be trickling down to the rest of the population?
That's a good point, John, and I think a conspiracy theory. It's Mike Murphy. Good morning, by the way. Sorry. A conspiracy theorist could say, you know, the numbers are getting really strong just before the election, you know, which I think is kind of interesting. But does any of it really matter, John, or are we just focused on the Bank of Japan and the Bank of England and the ECB and the Fed here? Is that really the only thing driving the market right now?
Well, I mean, the central banks are certainly a huge factor in stock markets, and we've seen that in the last week. You know, there was talk about the Fed raising rates on Friday, and the market tanked, and then people became a little less worried on Monday, and it came back, and then it turned around the other day. There certainly is a lot of concern, but I think what we're seeing in Japan right now and what we're seeing in Europe is that central banks are reaching the limits of what they're capable of doing to get economies going and even markets going. You know, negative interest rates have been a bit of a flop, particularly in Japan, potentially in Europe. And so there's really not that much more the central banks can do in those places. It's a slightly different story here in the U.S.
Slightly different, agreed. But to that point, do you think the Fed needs to hike, even if they don't necessarily want to hike or have the data to back the hike, but they just want to hike so they don't end up like the Bank of Japan or the ECB?
Well, you know, so their point of view is that they're not going to be raising rates very much over the next 2 or 3 years because this economy is growing so slowly. And because inflation is so low, there's not really a lot of room to go up higher. And as a result, they're just taking it really slow. You know, I wrote a story earlier this week saying that it doesn't look like they're going to make a move in September. They had sent some signals that perhaps they would go in September, but it really looks unlikely right now. They want to go extremely slowly. And one of the reasons they want to go slowly is they don't want to end up in the position of Japan and Europe. You know, they want to let this economy run a little bit hotter before they do anything.
So no move likely next week when the Fed meets on the 21st. We're waiting on the Bank of England right now. No move expected there either, and it all comes down to an economy that is moving slowly, Lee Carter, and you keep seeing it in all the polls. This is what's most important to voters.
They're saying that the economy is the #1 issue to voters on both sides of the aisle right now. But what the voters are saying is they don't feel that jobs are, you know, that the unemployment rate is what it is. They're not feeling income growth. They're not feeling all of these things that the numbers are reporting. And a lot of people are saying the numbers are inflated.
So they don't even trust the numbers.
The numbers don't even make sense. The unemployment rate doesn't really tell you the story. What tells you the story is the percent of the working age population that actually have a job. And that number is back to levels we haven't seen since the 1970s. And that's when women hadn't really fully entered into the workforce. So who cares what the unemployment rate is? Look at what percent of the population that could work actually is working.
I think what's going on here is that the unemployment rate is low. It doesn't pick up all of these workers who have been on the sidelines. But the reason I think for the dismay with the economy that we're seeing in the polls is this accumulation of disappointment. Like I said earlier, it's taken more than 7 years to get an unemployment rate back below 5%. After the financial crisis of 07 to 09. It's taken a long time. And people have suffered through that, and they're not forgetting just because we're at a point now where unemployment looks like it's a little bit lower. There's been this accumulation of disappointment, which is carrying its way in the polls, I believe.
Yeah, it feels that way. John, good to see you. Thanks so much.
Sure thing.
John Hilsenrath joining us.